Welcome to today's deep dive, where we're going to go a little bit deeper than the headlines.
Yeah.
And explore the top 20 performing companies in the S&P 500
Yeah.
for 2024 so far.
So far this year.
Yeah, we've got a breakdown of, these kind of market movers, what sectors they're in, and the reasons behind their stellar performance.
Yeah.
But what we're really after, though, is uncovering the trends that are shaping the market and maybe even sparking some investment ideas for you.
Yeah, I think what's really interesting about this list is it's not just a random collection of companies, right? This is really like a snapshot of the economic forces at play.
Oh, interesting.
You know, these top performers are almost like the canaries in the coal mine signaling shifts that could impact all of us.
I like that analogy.
Yeah.
So let's look at these canaries, shall we? Right off the bat, we see a few sectors dominating the top 20.
Yeah.
Energy's clearly having a moment, both traditional and renewable.
Yeah.
Then there's tech with semiconductors and software, but AI is the clear driving force there. And we can't forget the resurgence of aerospace and defense.
Yeah, you've hit the nail on the head. Those three sectors, energy, tech, and aerospace and defense, they're really the heavy hitters this year.
Yeah.
And they represent broader trends that are reshaping the global landscape.
Let's start with energy then. What's fueling this boom, especially in the renewable space?
Yeah.
Is it just hype, or is there something more substantial driving this growth?
It's definitely more than just hype. There's a confluence of factors driving the renewable energy boom. We've got global energy demand, increasing climate change concerns are pushing for cleaner alternatives, and government incentives are making renewables a more attractive investment.
Okay, that makes sense. But here's where it gets really interesting for me. The number one performer with an astounding 318.2% return is Vistra Corp.
Wow.
They're in the renewable energy space, but they also deal with traditional power sources like natural gas.
Right.
It seems like they've managed to play both sides of the field.
Absolutely. Vistra's success highlights a key strategy for navigating this energy transition, and that's diversification. They haven't just jumped on the renewable bandwagon. They've made strategic acquisitions, expanding both their renewable and natural gas assets.
Oh, interesting.
This approach allows them to adapt to market shifts, meeting current energy demands, while positioning themselves for a future powered by cleaner sources.
So they're hedging their bets, so to speak. Not putting all their eggs in one basket.
Exactly.
That seems like a pretty smart move, considering how volatile the energy market can be.
Right.
But it begs the question, is this renewable energy boom a long-term trend or just a temporary spike driven by, I don't know, government subsidies and things like that?
That's the million-dollar question, isn't it?
Yeah.
I think it's important to remember that the energy transition is a long game. There will be fluctuations, but the overall trend toward cleaner energy is undeniable. Factors like climate change, technological advancements, and shifting consumer preferences are all contributing to this shift. Vistra's performance seems to support that view. They've positioned themselves to capitalize on both the immediate needs of the market and the long-term potential of renewables.
That's a great point. It's not just about chasing the latest fad. It's about understanding the underlying forces driving these trends and positioning yourself for long-term success.
Exactly.
Now, speaking of long-term trends, let's move on to tech. It's no surprise to see giants like NVIDIA and Palantir in the top 20. But again, the AI angle is what's really pushing them forward.
Right.
What's your take on that? Is this AI hype finally living up to its potential, or is it another bubble waiting to burst?
I think it's safe to say that AI has moved beyond the hype phase and into the realm of tangible impact.
Oh.
It's no longer a futuristic concept confined to research labs. AI is here, it's transforming industries, and these companies are at the forefront of that transformation. NVIDIA's dominance in AI chips is driving everything from self-driving cars to drug discovery and even climate modeling. Meanwhile, Palantir is leveraging AI for data analysis in both government and commercial sectors, helping organizations make sense of vast amounts of data and make better decisions.
It really is amazing to see how AI is infiltrating every aspect of our lives. But it also makes you wonder about the potential downsides, right?
Right.
I mean, we've all seen those sci-fi movies where the robots take over.
Right.
What are your thoughts on the broader implications of this AI revolution, both good and bad?
That's a crucial question and one that we'll be grappling with for years to come.
Yeah.
The potential benefits of AI are enormous, but so are the risks. On the positive side, AI has the potential to solve some of the world's most pressing problems, from developing new medical treatments to combating climate change. But it also raises ethical concerns about job displacement, algorithmic bias, and the potential for misuse.
So it's a double-edged sword then.
Yeah, I think so.
Lots of potential for good. But we need to be mindful of the potential pitfalls as well. It sounds like we're on the cusp of a really transformative period, and it's both exciting and a little bit scary.
Right.
Now, before we dive into some of the other fascinating companies on this list, let's touch on the comeback kid. Aerospace and defense.
Okay.
We've got companies like Axon Enterprise, Howmet Aerospace, and even General Electric making a strong showing this year.
Interesting.
What's behind this resurgence?
Yeah.
Is it just a blip on the radar, or is there something more substantial driving this growth?
It's definitely more than a blip. The aerospace and defense sector is experiencing a resurgence fueled by a combination of factors. On the commercial side, air travel is rebounding strongly as the world recovers from the pandemic.
Oh, okay.
People are eager to travel again, and that's boosting demand for new aircraft and related services. On the defense side, we're seeing increased global spending driven by geopolitical uncertainties and rising tensions in various parts of the world.
So it's a bit of a mixed bag then. On the one hand, we have this positive trend of people re-engaging with the world and wanting to travel.
Right.
On the other hand, we have this undercurrent of uncertainty and conflict driving defense spending.
Right.
It's a reminder that even in times of economic growth, there are always challenges and complexities to consider.
Absolutely. The global landscape is constantly shifting, and the aerospace and defense sector is a prime example of how those shifts can create both opportunities and challenges for businesses.
Now, since we're talking about travel, let's shift our focus to a couple of companies that are riding that wave of pent-up wanderlust. United Airlines and Royal Caribbean are both seeing impressive gains this year, signaling that people are ready to get out there and explore again. What are your thoughts on this travel rebound? Is it sustainable? Or are we just seeing a temporary burst of enthusiasm that will fizzle out once people get their travel fix?
That's a great question. It's clear that there's a lot of pent-up demand for travel and experiences. The pandemic forced people to stay home for extended periods, and now they're eager to make up for lost time. But the question of sustainability is a complex one.
Oh, okay.
The initial surge in travel might level off as people satisfy their immediate desire to explore.
Right.
However, I think the pandemic has also prompted many people to reevaluate their priorities.
Interesting.
Experiences, travel connection, these things have taken on a new significance for many.
That's an interesting point. Perhaps this isn't just a temporary blip, but a more fundamental shift in how people prioritize experiences over material possessions.
Right.
And if that's the case, it could have ripple effects throughout the economy, impacting everything from the travel and hospitality industries to retail and entertainment. It seems like there's a lot to unpack here, and we're just scratching the surface. But before we delve deeper into the nuances of consumer behavior and the companies that are benefiting from those shifts, let's take a quick break. We'll be right back with more insights from the S&P 500's top performers. Don't go anywhere.
We'll be back soon.
All right, see you in a sec.
Yeah.
Welcome back. We're just discussing the travel rebound and how it might signal a larger shift in consumer priorities. But let's zoom out a bit and look at some other interesting insights we can glean from the remaining companies on this top 20 list.
Yeah,
There are some real gems in here that speak to trends we might not have even considered.
absolutely. There are some real hidden champions on this list, companies that might not be household names, but are playing a crucial role in shaping the future. One that caught my eye is Iron Mountain.
Okay.
They specialize in data storage and management, and their impressive gains this year highlight just how important data has become in our increasingly digital world.
That's interesting. I'll admit I hadn't given much thought to data storage before, but you're right.
Yeah,
It's become absolutely essential for businesses and individuals alike.
absolutely.
With the rise of AI, big data, and the Internet of Things, the need for secure and reliable data storage solutions is only going to grow. It's like digital real estate. And Iron Mountain is becoming the landlord of the data world.
That's a great analogy. And speaking of data, another company on this list that speaks to its growing importance is Fair Isaac, better known as FICO.
Oh, yeah.
They provide credit scoring and analytics, and their success underscores the increasing reliance on data-driven decision-making, not just in finance, but across various industries.
So it's not just about storing data.
Right.
It's about using it effectively to make smarter decisions.
Exactly.
I can see how that would give a company like FICO a real edge in today's data-driven world. It's like they're helping businesses navigate this ocean of information and find the insights that really matter.
Precisely. Data is becoming the lifeblood of the modern economy, and companies that can harness its power will have a significant advantage. Now, while we're on the topic of key resources, we can't forget about the oil and gas sector, which has also seen strong performance this year. Companies like Texas Pacific Land and Targa Resources have benefited from rising energy prices, reminding us that despite the push for renewables, fossil fuels still play a vital role in the global economy.
It's a complex picture, isn't it?
Yeah.
We're striving for a cleaner energy future, but the reality is that we still rely heavily on fossil fuels to meet our current energy needs.
Yeah.
It's a transition that will take time, and it's interesting to see how these different forces are playing out in the market.
Now, while we're talking about transitions, let's revisit Netflix for a moment.
Okay.
They've made a remarkable comeback this year, but the streaming landscape is incredibly competitive.
It is.
Do you think they can maintain this momentum, or are they facing an uphill battle against rivals like Disney Plus and HBO Max? That's the big question hanging over Netflix. Their strategy of introducing advertising and cracking down on password sharing has yielded positive results so far, but the streaming wars are far from over. To stay ahead, they'll need to keep innovating, producing compelling content, and finding ways to differentiate themselves in a crowded market. It's a high-stakes game, and the competition is fierce.
It's like a constant arms race, with each streaming service vying for our attention and subscription dollars.
Right?
Speaking of competition, another company that's been battling it out in a crowded market is GoDaddy.
Right.
They provide website hosting and other services for small businesses, and their success is a testament to the enduring entrepreneurial spirit. Even in a challenging economic environment, people are finding ways to start and grow their own businesses.
Absolutely. GoDaddy's performance is a sign that the entrepreneurial fire is still burning bright. It speaks to the resilience and adaptability of small businesses, which are often the engine of economic growth and innovation. Despite the uncertainties and headwinds they face, entrepreneurs are finding ways to thrive, and that's an encouraging sign for the economy as a whole.
It's definitely inspiring to see that kind of determination and resourcefulness.
Yeah.
It reminds us that even in times of change and disruption, there are always opportunities for those who are willing to seize them. And this brings us back to a point we touched on earlier: consumer behavior. Despite economic uncertainty, people are still spending, investing, and creating. They're finding ways to adapt and make the most of this situation, whether that means traveling the world, starting a business, or simply finding joy in everyday experiences.
Exactly. And this resilience is reflected in the performance of companies like KKR, a private equity firm whose diverse portfolio has thrived in these market conditions.
Oh, okay.
Now, to clarify for our listener, a private equity firm pools money from investors to buy and restructure companies. Their success suggests that even amidst volatility, there are still pockets of opportunity and growth, especially for those who have the expertise and resources to identify and capitalize on them.
So it's not just about riding the wave of popular trends. It's about understanding the nuances of the market and finding those hidden gems that might be overlooked by others.
It's about having a discerning eye and a willingness to think outside the box. And that brings us to another fascinating company on this list, Constellation Energy. They're in the utility sector, but with a focus on nuclear energy. Their strong performance this year raises some interesting questions about the role of nuclear power in the future energy mix. Constellation's performance is noteworthy because it reflects a growing recognition of nuclear energy's potential as a reliable and carbon-free source of power. While the debate over nuclear safety and waste disposal continues, there's a growing sense that nuclear power might be an essential part of the solution to climate change. It provides a baseload source of electricity that's not dependent on weather conditions, unlike solar and wind power.
So it's like having a reliable backup generator for the power grid, ensuring a steady flow of electricity even when the sun isn't shining or the wind isn't blowing.
Right.
That's an important consideration as we transition to a cleaner energy future.
Oh.
And speaking of clean energy, another company on this list that's making waves is NRG Energy. They're also in the utilities sector, but their focus is on renewable energy sources. Their success highlights the continued growth and momentum of the renewable energy sector, even as traditional sources like oil and gas hold their ground.
NRG's performance is a testament to the fact that the energy transition is a multifaceted process. It's not just about replacing fossil fuels with renewables, it's about creating a diverse and resilient energy mix that can meet our growing needs while minimizing our environmental impact. It's a complex puzzle, but companies like NRG are showing that it's possible to create a cleaner and more sustainable energy future.
It's encouraging to see these companies pushing the boundaries and paving the way for a brighter future. But before we get too carried away with optimism, let's take a moment to acknowledge the challenges that still lie ahead. The energy transition is a massive undertaking, and it will require significant investments, technological advancements, and policy changes to achieve our goals. It's a marathon, not a sprint, and there will be bumps along the way.
You're absolutely right. There's no quick fix to the complex challenges we face, but the companies on this list offer a glimmer of hope. They're demonstrating that innovation is happening, progress is being made, and a more sustainable future is within reach if we continue to push forward.
Well said. Now, before we wrap up this part of our deep dive, there's one more company I want to touch on that I think perfectly embodies the theme of resilience and adaptation. GE Aerospace.
Okay.
Their return might not be as eye-popping as some of the other giants we've discussed, but their story is one of overcoming adversity and emerging stronger.
That's a great point. GE Aerospace is a prime example of a company that has gone through a period of significant restructuring and industry challenges, but they've come out on the other side with a renewed focus on innovation and efficiency. Their performance this year is a testament to their ability to adapt, evolve, and thrive in a rapidly changing market.
It's a reminder that past performance isn't always indicative of future success, and that companies like people can learn from their mistakes, make adjustments, and come back stronger than ever. And with that inspiring thought, let's take another quick break. When we come back, we'll wrap up our deep dive with some final thoughts and key takeaways from our exploration of the S&P 500's top performers. Stay tuned.
We'll be right back.
Welcome back. We were just talking about GE Aerospace and their impressive comeback story.
Yeah.
It's a great reminder that even in a market that seems obsessed with the next big thing, there's something to be said for those who can weather the storm and come out stronger on the other side.
Absolutely. Resilience and adaptability are just as crucial as innovation when it comes to long-term success. And GE Aerospace's performance this year really underscores that point.
Yeah, it really does.
They've proven that it's possible to reinvent yourself even within an established industry and emerge as a leader.
So as we kind of wrap up this deep dive, I'm curious to hear your overall reflections on what we've uncovered. What are the key takeaways you hope our listener will walk away with?
Well, I think one of the biggest takeaways is that the market is a dynamic and interconnected ecosystem. These top-performing companies aren't just isolated success stories. They're signposts pointing towards larger trends shaping our world. Whether it's the energy transition, the AI revolution, the changing nature of work, or the evolving consumer landscape, these companies are at the forefront of these shifts.
It's like we've been given a glimpse into the future, or at least a roadmap, of the forces that are shaping it. And while some of these trends might seem daunting, there's also a sense of excitement and possibility in the air.
Exactly. Change can be unsettling, but it also creates opportunities for growth and innovation. And by understanding these trends, we can position ourselves to not only navigate the changes, but also potentially benefit from them.
So it's not just about passively observing these trends. It's about actively engaging with them, learning from them, and using that knowledge to make informed decisions about our investments, our careers, and even our lives.
Precisely. And remember, the market is constantly evolving. Today's top performers might not be tomorrow's winners. New trends are always emerging, and new challengers are always rising to the top. That's what makes the market so fascinating and unpredictable.
So what advice would you give our listener who's feeling inspired to delve deeper into these trends and maybe even uncover some hidden gems of their own?
I'd say stay curious, do your own research, and don't be afraid to think outside the box. Look beyond the headlines and explore different sectors, emerging technologies, and companies that are pushing the boundaries of innovation.
And who knows, maybe one day we'll be doing a deep dive into your portfolio of winning stocks.
That would certainly be a testament to the power of curiosity and the rewards of staying ahead of the curve.
Well, on that note, I think it's time to wrap up this deep dive. Thanks for joining us on this exploration of the S&P 500's top performers. It's been a fascinating journey through the market's landscape, and we hope you've gained some valuable insights along the way.
It's been a pleasure sharing these insights with you and our listener. Until next time, keep exploring, keep learning, and keep investing in your knowledge.
We'll catch you next time on the deep dive with another thought-provoking topic and a fresh perspective on the forces shaping our world.